Welcome everybody to another quick hit review. It is Sunday the 9th of June. Hope everybody's had a good weekend. My weekend has been very busy working on the new website, which is late launching. I was hoping to launch last week really, but a few problems to do with the registration and text messages going out, a few problems with email notifications, usual thing when you're trying to get something off the ground, but it's coming along quite well. I'm really hoping within a week I can release it. I've got a couple of traders that have been kind enough to test it, found a couple of issues with the messaging system, but hopefully that will be all up and running for the end of this week or maybe the beginning of next week. But right now I have half a dozen currency pairs on the radar. First one is the Aussie dollar CAD. We've spoken about this quite a few times, so I'm just going to talk through this now. I'm going to put a structure level on at the closes of the candles as to where price came to, and also at the wicks, and this is what I like to call the price reversal zone. And we've got this key level here, we've got this wick, and we've got a zone, a test just here as well, and from that point we are seeing a rejection. So as we drop down the time frames, this was what I was saying last week that we want to pay attention to. We do have a swing in the market just here, and you can look at this as a head and shoulders if it's valid for you. Now if it's not, you can still look at this as being a potential trend rotation, because what we've done just here is we've violated the outside return, or it could be a left shoulder. And I said last week this is what I was waiting for, to see if we would violate this. I'm now going to be looking for a pullback. Pay attention to the structure area, but the main one is the outside return just here. Look for an opportunity here to get short. Because we've come very deep here, if this is a head and shoulders for you, you're going to have a very nice risk to reward in terms of playing for just an AB equals CD pattern. This is the beauty of head and shoulders, is that it has its highest probability of hitting an AB equals CD pattern, and when we do have these deep retracements like this, and hopefully shallow retracements, deep extensions and shallow retracements, we do get this lovely extension. And depending what your entry is here, I mean, if you was to get a double top just here, you could have this much risk and this much reward. So it's going to work out to be a very nice trading opportunity with a low amount of risk if we get that retracement, and obviously depending what our entry is going to be. Aussie dollar, we do have a potential flag pattern. I always like to see flag patterns. I do believe I'm quite good at trading them. They are very profitable for me. So structure level on here at the closes of these candles, and if we zoom in, we have actually violated above that level. So what we can do is we can move it up to this next level here, and I'm going to throw another structure level on at these lows here, so you can see that we've got this double test. We've got a test here, a test there, giving us a price reversal zone just here, and you can see that we've kind of double tested this area. Pay attention to the fact that we are at a psychological number, though we have not had any RSI confirmation. Let's go down to the 240. Here on the 240 we have technically held this structure level just here. We have not violated it, so right now this is a hold. Well, let's take a look at the bigger picture. And the bigger picture was that we had a triple test down here, 1, 2, 3. Since then we've had a move higher, a pullback, and then with this move higher here, this is the move that actually violated the V point of the double bottom, putting us in potential trend rotation, and then we've seen a little pullback, and now we're back up retesting this structure level. If we look left though, we're not really at, there's nothing here really, but we are obviously in that daily price reversal zone. So this could certainly be a decision point here as to which way we could go. There's actually no higher time frame confirmation On the 60, you see here on the 60, we didn't even violate here on the 60, we've held that structure level. But on the 15, what we do have is a potential flag pattern. Now we have a swing in the market, we have a directional pole, and then we have, if we draw out on the closes of the candles, duplicate it and move it down, we're looking for 1, 2, 3, our fourth test around here. Typically these tend to turn in the wicks, and we could have our fourth test down in this level. We do want some fib confluence as well, and that's going to bring us down to around about a 61.8 fib around that level. Now personally, I would only be playing for a retest here, so depending what your entry is, you might be looking at this much of risk for around this much of reward. That's the Aussie dollar, Euro, Aussie. Another pair that I talked about last week where I was saying we could be looking for long opportunities, and the reason for that is because if I put a structure level on at the closes of the candles here and at the closes of the candles there, then what price did is we broke above it, failed to hit the projected targets. I mean, just look at this structure level up here. High probability we're going to go up here to this 16300 psychological number. And what we did is we basically came down, consolidated, and last week I did say look for long opportunities here. Never really got it, but what you do have now is we have now had a higher high, higher close above this structure level, and there's still room to go up to this structure level and obviously that bigger structure level. If we drop down to the 240, it's ugly. If I'm completely honest with you, there's very little here. When I was looking at this move here, and then I saw the fact that we were just kind of in this channel, and this isn't a flag, it's simply a channel, but these channels can break either way. What I'm personally going to look for now is, I treat channels are just structure. Channels are just horizontal structure like this, except they're ascending or descending structure lines. To my personal preference, if I'm quite honest with you, I love channels. I've done some educational material on channels, and they are ridiculously profitable if you know what to spot for early and you know the strategies you can implement within inside of them. In fact, some of the educational material I've shown just one of these consolidation areas, these channels, where we'd had like 5-6 winners in a row for 180 pips over 24 hours, and it was just insane. And you only get that type of that opportunity within channels. But anyway, what I'm looking for here now is we have now broken out of our highs just here. This was the highest point, and you can look for some sort of pullback, maybe an inverted head and shoulders, maybe a 3-point move, a 3-bar reversal, something like that. It's going to have to be something conservative here because it's ugly. It really is ugly. What can I talk about here? Right now there's nothing, but I would be looking for long opportunities there. Euro dollar, we got the break to the upside. Remember last week I told you that I think we could see a break to the upside, and we got it. We was looking at getting involved down here. Since then we've seen a move of 170 pips. How high this can actually go, I'm not too sure, to be honest with you. I don't think it's going to have legs, because I do believe at some point we're going to turn and come the other way. A couple of things to watch out for though is that if I put a structure level on down here, 1, 2, 3, this is now we broke above like this. We broke above the V point of not just a double bottom, but a triple retest. And the double bottoms are a rotation pattern, so what it means is that we rotate the trend and go the other way. The more times we test a level though, typically the higher we go, and 3 times we tested here, so we've seen a decent rally. If I put a structure level on just at the highs here, we have now had a confirmed break above, close above this level, so we could potentially come higher up to this zone. If I'm honest, I would not be looking for any further long opportunities than this level. But what you do have here is a very nice daily cipher. It's a very big one. So we're looking at X to A to B, B to C, and a CD completion up around this level. I'll just work it out exactly. We're looking for that 786. Okay, so a little bit higher there. Just to go over a couple of things, I'll talk about the euro dollar in a second, but the New Zealand dollar, the trade that I spoke about where we had the potential Gartley and we was looking at getting involved in Head and Shoulders, I think it was, and I was saying if you can't get your optimum entry, don't worry, wait, because there was 150 pips or 170 pips to go until we hit targets, and that thing just went in a straight line and never retraced whatsoever. So we called it a 170 pip move, never got a chance to get involved, and that was an advanced pattern. It was a Gartley, and here we are now. We have a big daily cipher pattern on the euro dollar where I believe that we can come up to potentially this level and we could see a retracement. So what I'm going to be looking for is entries from the 786 up to this point, and I'm going to be looking for rotation patterns, so double tops and head and shoulders. Okay, nothing on the lower time frame, I don't think. Let's just go and take a quick ganders. Well, actually, no, you do have something here. You've got a move higher, and we saw a pullback. Now we've made a new higher, so we technically now have a 3-point move, and we know that this here is a violation of this level of structure. So actually I would be on the lookout here for anything in the outside return. Problem is this is a very big outside return, but what is that? Okay, all right, we may have something here. We may have an AB equals CD pattern coming into that zone, and we may then be able to look for a reversal from that point. Yeah, there's no structure there, so it's not one that I'll actively sell the market on, but you can look for a couple of things. You can look at the market coming into the 382, and you can see here that we've got this double structure area, and you could look for long opportunities. Look at that, just so happens to come in at the 11300 psychological number, or you could look at the market coming to the 61.8 and looking for an entry reason there, chance to get long. Let's go and take a look at the pound Aussie. Pound Aussie, we got the move again on the pound Aussie. Last week trading for me was terrible. It was absolutely terrible. I called 3 or 4 really big moves that moved about 150 pips, including the pound Aussie, the euro dollar, the New Zealand dollar. There was around 400-500 pips of movement, and I couldn't get involved in a single one of them. Instead, I took about 8 losses. 8 losses and 2 winners last week. It was just one of those weeks where just everything I called went the right way, and everything I got in just lost, and it was just one of those things. But here we are anyway. Pound Aussie, I've been saying for a while, pay attention to this structure level. We could see a couple of 100 pip move here up into this structure level, and we failed to get up there just yet. Now, for my data, this candle right here is a higher high, higher close. It is only by a couple of pips, so check your data. And right now what we've done is we've tried to push higher and we've been beaten back. Nevertheless, my bias here is that I still think we could see a pop to the upside. If we drop to the 240, 240, okay, 240. So we had kind of this retest within the wicks. We saw a move higher, and with this candle we violated this V point of the double bottom. And last week I said, look, you could treat this as a 61.8, as a 26.18, and look at buying up the 61.8. We literally just tapped that 61.8 and rallied up for a retest of the highs. Not only that, we've now put in another new high. So it's very ugly here on the 240. So let's go and take a look at the 60. And it's a lot better here on the 60. So this is the way it looks here. We had a move higher, a pullback, a move higher, a pullback, and this is technically the outside return just here. You do have a lovely couple of tweezer bottoms there. Yeah, tweezer bottom candles, long wicked candles. Look at how the body closed in the top 15%. Good sign here of lots and lots of buying pressure. The problem is we're talking 50 pips of risk on this type of trade, and I would need something more conservative. Let's just take a look at the 15, see if there's anything here. Well, you could actually. What you've got here, you've got the RSI oversold, divergence, and you can just make out here a little double bottom, which is valid. Go and put that back. Little double bottom here, you can see. You might be able to see it better on the 5. We have just had a violation, so we've broken above the B point, so you could look at a 26.18 here. Chance to get involved at the 61.8, stops down below, playing for a retest of the highs for target 1s, and then I would manage target 2s, to be honest with you, on every outside return. Let's just drop to the 5 and see if this is actually valid. I mean, if this is valid for you, it certainly is an opportunity to get involved. No, it's not valid on the 5. It's an ugly double bottom, but it has come into structure. We are in trend, but my bias is long. Could offer you an opportunity. Probably not something I can get involved with, because on the open we could easily just gap down here and be at market. And I won't be taking the trade on a pound Aussie on the lower time frame soon as the market opens, but it's a potential. And the last one really is going to be the pound yen. We've got a potential AB equals CD pattern. And I'm going to be looking for a double top. So structure level on at the lows here. We're still looking at the market coming lower, but right now we are putting multiple higher closes. This candle here is a rejection candle, indicating that there's buying pressure here, so we could still see some movement to the upside. Let's go and take a look at the 240. What concerns me here on the 240 is this. This is a double bottom. We violated, saw a pullback, and now we've violated again to the upside. Where have we come to? We've come into this area just here. So what I would be looking for is an AB equals CD pattern, looking like this. Duplicate that, move it up. The problem for me is that the completion of it comes in the middle of nowhere. Nowhere at all other than in this outside return. And because of this retest here, I wouldn't be too comfortable playing for a retest of the lows. What I'd do is I'd drop down to the 60, and I'm going to be looking for a confirmed double top or a head and shoulders, which we might get here. So a confirmed double top is that we will see the market come up, we will double top, and then we will violate to the downside. We'll see a pullback for 26.18, and then I'll play for fib targets, target 1, target 2, maybe even target 3s for a retest of the lows. If not, it's going to be an ugly one, but this could be the start of a head and shoulders, something like this. And I'll just redraw out that AB equals CD pattern. So it is a potential. We'll see what happens going into next week. That's it, guys. That's all I have on the radar.